Good evening, Anne Kruger with ABC News. It's the biggest public share offer in Australia in more than a decade. The Queensland Government has officially launched the sale of QR National, valuing it at up to $7 billion. There's strong opposition to the sell-off and the unions claim it's going to cost jobs. And there are warnings that profits could be jeopardised by any future carbon and resources taxes introduced by the federal government.
It's the largest public float since Telstra, but the Queensland Government is hoping for better results.
By their nature, asset sales by governments at any level of any political persuasion are controversial. And this one, without a doubt, has been very controversial.
The Premier launched the sale of QR National today, valuing the company at between $6.1 and $7.3 billion. The government will keep between 25% and 40% of the business for the time being.
As a government, we're putting our money where our mouth is in terms of this offer.
Up to 1.68 million shares will be sold off at between $2.50 and $3 a share. More than 1 million people have pre-registered for the deal.
We have a very strong level of investor interest. That's a good indicator that we're on track for a very good outcome for taxpayers.
But it does come with risks. Investors have been warned of a possible threat to profits if the federal government's carbon and resources taxes are revised. There could be a significant impact on the price of coal and an increase in operating costs.
We're not telling Queenslanders not to buy it. We're just telling the Labor government that they shouldn't be selling it. Queenslanders don't want something sold that they already own.
Employees will each be given $1,000 worth of shares, but the union says it will come at a cost. Jobs.
They have already documented in a clear analysis that 940 jobs have to go.
The company will be officially listed on the Australian Stock Exchange on the 22nd of November. It's expected to become one of the 50 largest companies. Meg Purtell, ABC News, Brisbane.